Hello, everybody. Thank you for joining. I'm toggling a whole bunch of for joining. Yeah, let me turn on my camera. That would be clever, wouldn't it? Hey, it's been a long week, and the United States Securities and Exchange Commission has not helped things any. So let's jump in. This is going to be called the Crypto Crackdown Continues, which is not so good. Thank you, everybody here, for joining. It's good to see all the usual suspects. I'm just going to jump in, and then we might walk through some charts as well to show the actual damage, and maybe pry out some little pieces of good news. And of course, like usual, this is edutainment. And please subscribe if you want to amplify your intelligence, as we say. So the story today, well, I'm going to talk about a whole bunch of stuff: liquidity, banks towards the end, and what exactly is what's going on. Bitcoin mining, Ethereum versus Bitcoin. Talk about some of the altcoins that were hit, classified as securities. Is it the end of the world? What people at these altcoins actually think, and so much more. First of all, though, yesterday I did a video, caused a bit of consternation. People weren't exactly sure what I was doing. Well, first of all, it was a question I was posed. Will Ethereum flip Bitcoin, number one, and what could perform better? And this was an analysis like I do based on data. And if I was appraising these apples and oranges, I'm very familiar, they're very different. Orange is Bitcoin, apple is Ethereum. Which would win out and which do I believe would perform over time? My allocations have not changed. And you can see the answer. So I hope people don't think I meant that Bitcoin is bad or Ethereum is bad or good or bad or whatever. They're both very, very different. And they're both probably the two safest cryptos to be in right now. That's why they make up 95, 96% of my positions in crypto. Again, always fully transparent. So let's talk about Bitcoin real quick and jump in and find out exactly where we are. So this is from Swissblock. So here, despite the retracement, yesterday or last week, we shot left to nearly bullish, and we've just back into neutral, almost on the verge of bearishness. But according to the folks at Swissblock, they believe, it's been a very resilient week for crypto, at least Bitcoin and Ethereum. Other names kind of beaten down. We're still in that consolidation range, 25.4K to 27.3K range. But the channel's getting tighter. Like now it's more like 26.3 to 26.7 thousand dollars, and few players are taking on risk right now. Volume is extremely light. There is a little bit of almost bearish momentum, and you can see that's the pink quadrant on the bottom. We're knocking on the door of that quadrant, which is bearish, which is not good. But what people do believe is storms will pass, and when they do, the Swissblock team believe we could shoot to 35K pretty quick, because there's so little volume right now, and there's so much bad news, and it's still very, very constant, which is a positive. So it won't take a lot to move the asset if things do return. In addition, speaking of the asset, Bitcoin Energy update, it's now 52.2% net zero. Big thank you to Sanjay for sharing this. I can share more on it later if you're interested. But, there was a time only a few months ago where they thought it was about 56.6% renewable energy. But I don't know if that's the same as zero emission energy. I'm not an energy ESG expert, in fact, at all. But the good news is, though, despite the hash rate rising for Bitcoin, total emissions are falling. And the hash rate has been going through the roof. It's nearly tripled over the last 2 years, etc. So it's a very, very bizarre time. And I see in the comments there, I say Elon is tweeting about Pepe. Oh, dear. Like, it's crazy. We'll talk about some of the alts that were hit by this lawsuit, but why? There's so many scams out there, and then they go after things like MATIC and Cardano and Solana. It's like, what's this vendetta about? Anyway, there's probably some reason. Now, this is from the Bloomberg conference. Jay Clayton, who is the former chairman of the SEC, he's the old Gary Gensler, not old in age, but predecessor. He's now an advisor of Sullivan and Cromwell, a very big law firm, and Dan Moorhead, the founder and managing partner of Pantera. They discussed the stressed out crypto markets and the SEC taking their aggressive approach to regulating crypto. doors closed, not answering questions for companies like Coinbase, etc. And these two fellows believe that it is helping the US lose its global leadership in the space. Now, they also spoke about stablecoins, how they are a promising use case for cryptocurrency, as they provide a more efficient way to transfer money around the world and also strengthen the dollar. They didn't actually mention that, but I'm inserting that as well. And regulators need to think about blockchain technology in a global context, not just a local vendetta type approach. Again, not their words, my words here. And the US needs to find a proper balance between regulation and, helping promote the space. Because according to them, the net takeaway from this is blockchain is here to stay. It's not going away. They can try suppress it, smother it a little bit, but they're not going to kill it. It's a cockroach. And that's the good news. So, we've been through some wicked storms in 2022. I was chatting with Ran earlier today, and he said all the bombs have dropped. The bombs have fallen. They've had their impact. So as far as he's concerned, kind of like, the bad news is as much as we can be. But Mr. Druckenmiller, and I respect Mr. Druckenmiller a lot, he came out with his bubble chart, and it's a history of asset bubbles with cumulative returns on the left axis. And you can see it all started with asset bubbles in gold in the 70s, then the Nikkei in the 80s, Thailand 90s, technology up until the dot-com crash in 2000. US housing had a bubble up to 2008 global financial crisis. China had a bubble. Biotech had a bubble up to end of 2016. ARK had a bubble. FANG had a bubble. And now Bitcoin has a bubble. So I think there's so much we can learn from Mr. Druckenmiller. If anybody wants me to do a video on him, I've been analyzing him for a long time. He's a very humble guy. And he does believe, per this chart, Bitcoin is a bubble, but he's not anti-Bitcoin. He's also not anti-AI or NVIDIA. He actually believes in it. He believes in disruption. So there's so much that I want to share, particularly about how he thinks and his process. I think we can all learn something. But if that's too obscure, I do like to showcase kind of some of my heroes in videos. But let me know if that's of interest in a comment below if you want to do that. Because I do it for myself anyway. Let me see. Binance balances are dropping at last. This is from Willy Woo. And Bitcoin and ETH collateral on Binance, not just Binance US, is showing signs of dropping. So it's a little bit hard to see. But at the top, you have the Bitcoin price. Then Bitcoin bags in yellow. You can see it just fell off the face over the last 2 or 3 days. Ethereum as well, dropping quite substantially. So this is, again, to be expected. People shouldn't trust exchanges. Where there's smoke, there is fire, as many people say, and I've said for a long time. So we'll see exactly what comes to pass. But either way, the SEC has gone after the two biggest exchanges, which is not a good thing. Now, some Vitalik Ethereum news, considering I was talking about Ethereum yesterday, and I believe it could be a faster horse over the next 3 years. That's all I said. Nothing good, bad, or indifferent. But he did come out and he calls for 3 mandatory transitions for Ethereum. And I actually really respect the way Vitalik talks about his chain. Not his chain, of course, but he's one of the key ingredients makers for the chain. But he did go into detail around the importance of layer 2 scaling. Ethereum has seen the emergence of solutions like optimistic rollup and zero knowledge proofs, which have reduced transaction costs, which is very, very important. But he thinks further scaling is needed for the layer 2 ecosystem to mature and handle even more increased transactions and activity. He also warned something about layer 2 scaling, that if it's not done properly, high transaction fees, especially during market expansions, could be a real issue. And this could drive users towards centralized alternatives instead of decentralized alternatives like Ethereum. He also said security concerns are a big issue. And he suggested transitioning to smart contract wallets, features like social recovery for improved security and user experience, which is kind of cool, weaving in the importance of social. Privacy measures. Buterin also emphasized the importance of privacy as a third transition for Ethereum, and the lack of robust data privacy could discourage users from using Ethereum. And he also proposed implementing stealth address protocols to provide privacy features for Ethereum as well. I think some of this stuff, especially when you get to the privacy towards the end, could be a little bit dangerous because we've seen exactly what's happened in 4 European countries with clampdowns against privacy tokens. If Ethereum was going to become one, that could bring about more scrutiny from government. Right now, there is none for Bitcoin and Ethereum in the US, for example, which is a good thing, but let's not rock the boat too much. Now, Crypto.com suspends institutional service in the United States due to poor demand under tough market conditions. And the exchange said in a blog post that it will end trading for institutional clients on the 21st of June. That's just 12 days away. Also, it'll stop accepting new signups for institutional clients. And Crypto.com said the decision was made after careful review of its business. So again, another one bites the dust. It's like this choke point thing is choking the life out of many, many organizations, banks, exchanges, some tokens as well to some extent. But I still can't believe the scam tokens are still alive and well. It's bizarre. So a little post here regarding Solana. A lot of people are concerned with the weakness right now. We saw that Bitcoin is trading in a narrow range, but Solana and other names were hit hard. But the team remains very bullish despite this. The developers, etc., they know where the space is going. They know things like what Dan Moorhead at Pantera said. Blockchain is not going away. So they're building like crazy. So nothing has dampened that enthusiasm, which is good for now. But this is bad. Robinhood, the next big news today was they will delist Solana, Polygon, and Cardano as of the 27th of June, which is 18 days away approximately. Now, users can transfer these coins off the exchange until then. If they're not moved off to your own wallet by the 27th of June, Robinhood will sell them off and credit you with the money. So this move comes after Robinhood reviewed the SEC lawsuits against Coinbase and Binance. And I guess Robinhood does not want any scrutiny. They are a broker-dealer for securities trading, but may not have the capacity to trade unregistered securities. And so far, no other coins are affected on Robinhood. So that is kind of where we are with that. But I do believe that'll bring about some sell pressure for those names. In fact, let's look at a chart right now, if I can. Hold on a second. Make sure I can do this right. Yep, let me see. Yeah, so I'm just going to pop through a couple of quick charts here. These are some of the names that I just did mention. We have Solana down hard today, but off the floor, which is good to see. It did bounce a little bit. This is the last kind of 6 days or so. You can see at the very top there when Solana was at $22.30, the SEC news came out. And since then, downwards. But, per others, many believe there could be a bottom here. Cardano got hit too. Binance got hit, but then it bounced. Over the last 2.5 days, it hasn't budged at all, which is solid. And that's a good precursor that maybe things have completely bottomed out. MATIC got hit again today, but it also looks like it's kind of stalling at that 74 cents level. Bitcoin up from where it was when the SEC stuff started. So that's good. Ethereum as well. You can see here up, just like Bitcoin. In fact, Ethereum is slightly outperforming Bitcoin. And this other stock here kind of has gone crazy. Since that red arrow, that's when Tesla said they would open up their chargers to Ford. And since then, things are going bonkers. I mean, Tesla has just been ripping ever since then. So it's been a great year for Tesla and lots of AI technology disruptive stocks. But there will come a time, everybody, once all this SEC dust settles, people will revert back to chasing alpha. And I do believe crypto will bounce at that stage and we'll be ready. So in the meantime, keep your seatbelt on, hang tough, things will get better. Let's get back to some more news that pertains to what's going on in the world. I do believe there will be a little bit of sell pressure. This is the instructions from Robinhood. You can hit pause and read it if you use that account. They talk about Cardano, MATIC, and Sol, and that they will sell your stuff if you don't get it off, but feel free to remove it from the exchange, which is what you should have done anyway in the first place. Now, there are other people on Twitter saying a lot of stuff. Trader XO, buying Sol capitulation when it's done is going to be a good long. So a lot of people are still very bullish in the protocol. The question is, where is the bottom? Remember, Sol went down to $7, $8 only a few months ago. So it's up here at, what did we say it was? Nearly $18. So it's still a long way up from where it was. So we're all veterans. We can handle this. Meanwhile, Raj from Solana, he made a kind of a tweet. Solana apocalypse, NYC LFG, whatever that means, and then a picture of a cowboy in a cowboy hat. So, you know, these guys, they're kind of tough. They've been building for years and years. They don't see this changing anything. Again, US makes up 4% of the population. Gary Gensler's gone in 16 months. You know, if it is a security, it'll do what it needs to do to be a security like all the others. But we'll see where this goes. I think what the regulators need to do is really define the asset class properly, tell them what they need to do to conform, and then be done with it and have the exchanges. For some reason, the SEC are not cooperating with exchanges or tokens, etc. as we go forward. Now let's talk about Tesla news for a second. This is big, and I think this is kind of stunning news because, you know, this is a chart from Bloomberg as to how many fast chargers there are by connector type. The green are 100 kilowatt plus versus the rest. You don't want to be charging on a black charger because they're kind of slow. But this shows you the actual importance of the number of chargers. I can't remember the exact number right now. It's about 48,000 chargers from Tesla in the United States. It's more than all the other chargers combined. These are the new gas stations for the world. ICE is going away. A lot of people believe the year 2027 will be the year that ICE will be gone. And that will be a stunning time. But I had to have a little bit of fun today and put together a little bit of a meme, and a big thank you to the marketing department for implementing my vision perfectly. So imagine you go into a bar that's a Tesla bar and you got 3 different types of beers on tap. You got your GM beer and your Ford beer and your Tesla beer. A lot of people think, oh, Tesla opening up their proprietary superchargers for all the other car makers will devalue Tesla. No, it won't. It'll give the users of these other vehicles a chance to be up and close with the other vehicles. Maybe take a little sip of that little Tesla red as they go forward. That's what's important. This is a absolute checkmate move by Tesla. And Tesla's way more than just beer, as we know. Let's talk about Coinbase. Coinbase CEO, coincidentally, June 5th, by the way, June 5th, just the day literally before the SEC came down on them, sold 1.8 million of stock. As I say, great timing. Timing is everything in the markets. And boy, did Brian Armstrong nail that sale. You know, you could argue maybe it was pre-planned. Maybe it was contemplated. I don't know. Maybe it was scheduled because of they knew something was going down, but we'll see. Normally, there's always a little bit of information out there, so be careful. Let's talk about BTFP. This is the bank financing program that's out there to help banks deal with their underwater bonds that they have because they have such a low coupon rate. Many of them are worth half of what they paid for them or they funded into them. But you can see here, this program is alive and well and growing every single week, everybody. This is from Joe Consorti. Every single week, the banks are not out of the woods. The commercial real estate crisis is going to hit hard real soon when the refis come up. So a lot more pain to come, I'm afraid, ladies and gentlemen. But the good news about this is it is actually pumping the market full of QE. This is a picture here that you show the balance sheet runoff, the Fed balance sheet actually going down to the right. But then you got the Fed net liquidity actually going up. And guess what's going up with it? The S&P 500 index. So a lot of people say, oh, maybe it's just a coincidence that, you know, this BTFP program is actually pumping liquidity into the market, but it's directly correlated to the S&P 500. And that means, yes, liquidity makes the world go round, ladies and gentlemen, which is a good thing. This is from Jurian Trimmer, Fidelity, and this is the overall liquidity around the world. You can see we're off that baseline, that yellow line support. This includes liquidity out of Asia, etc., etc. So that is good. And remember, we like the liquidity to go up, not down. And the Fed, will be printing now, I've heard, $600 billion, $1.1 trillion in a very short window of time. They already printed about 100 billion, I think, a few days ago. So lots more liquidity coming, which will raise all boats, all risk assets, including crypto, which is good. And final piece of little news today. This I thought was interesting from The Economist magazine, and it looked at how different countries, the amount of hours worked of labor per person has fallen ever since the 1870s. Some countries have fallen more than others. I think Germany and Australia are down. US has been kind of probably the most stable, and the Americans seem to work more hours than anybody else. Britain down, France down, France down almost as much as, I can't tell the color difference to be honest, but it's either Australia or Germany where it's down too. But the point is, people are working less, and this is just in time maybe for the robot revolution that's coming to help build productivity, build abundance, as Jeff would say as well. So with that, a very big thank you to everybody on Patreon. I'll see you all tomorrow. Sorry about the markets kind of being weak, but it looks like, from a charting perspective, they've probably bottomed. So thanks again, everybody, for being here, and I'll see you all tomorrow. Get some rest. Next week, I think, will be interesting. Bye.